Ladies and gentlemen, welcome. Welcome to the results conference dedicated to the financial results for the second quarter of 2018. My name is Przemysław Lutkiewicz, and I'm the financial director and vice president of the management board, and I will tell you what happened during the past quarter. Well, we had a very good quarter, good time. So spring, summer collection were really appreciated by our customers, mostly women, therefore good sales results. During the first 6 months, the regular stores, well, the LFLs grew by 12%, well, the sales there. And, well, e-commerce is growing very fast as well, over 100% growth in this channel. And generally, group revenues during this first 6 months is the growth by 18%. We added nearly 50 new stores, and as you can see, most of them came from Sinsay. And Sinsay brand is currently growing the fast here, and we would like to accelerate this growth as well. There are no changes on the map because no new countries have been added to the map because the whole geographical expansion has been moved to the second half of the year. But I need to highlight that we are very happy about the sales in the south of Europe, so Hungary, Romania, Czech Republic. Well, they sell very well. LFLs are over 30% there. And LFLs in the second quarter of 2018, over 14% growth. All European countries showed positive LFLs, including the brands. And these are the LFLs in the normal, regular stores without e-commerce, whereas the e-commerce here, you can see that this is yet again a great quarter with a great sales, and the growth is over 100% year on year. How about individual brands? Well, the sales was growing the fastest in Sinsay and Reserved brand. If you take a look at the table, well, those two brands had the biggest growth of floor space. Well, we need to focus on house brand, and, well, the past year wasn't that good, but this year is doing really fine. But at this moment, Mojito is not doing as great today. So Reserved and Crop are selling over 50% of their collections abroad, beyond Poland. So I need to highlight that this is a historic moment for our company, for LPP. Let's take a look at the floor space table. The whole group had over 1 million square meters, and half of that of floor space, and half of it is 517,000 square meters. And Poland has 518,000 square meters. So at the end of the second quarter, Poland still owned slightly over half of our total floor space. But this is the last quarter like that, because as of the third quarter, the historic moment, more floor space will be outside of Poland. And, well, this will be continued in the coming years. And now, summarizing the total sales, well, our sales grew by 20% in the second quarter, and that was the second best reading. Well, we are very happy about the floor space sale, the sale per square meter. And all of our brands had this growth by square meter. And, well, usually our CE is growing very fast. And the margin, the gross margin, well, almost the highest during this period. So that means that we are selling really good collections at regular prices. We don't really have to go for sales. This is also the new allocation system, commodity allocation system. So we are using the big data. We analyze it and we sell the collections to the right stores. So we try to manage our commodities, our inventories the turnover better. And, well, we've been helped by the FX and dollar prices, 3.4 zloty per $1. So we bought our collection, summer spring collection, at the price of 3.45 per $1. So now about the unsold collections, because before it was displayed during the other operational costs. As of this year, as recommended by the auditor and in consistency with the international standards, well, the margin comes with the write-offs for unsold parts of collections. And that's what we did this time. Let's start with the store rent costs. As you can see, per square meter, they are flat year on year. But inside there, in the middle there, you can see some changes. So the bottom part is dedicated to the rent. So this growth in the second quarter is small, but it is there. And that's the result of the growing euro price. And additionally, we have good sales. And that also implicates the growing rent per turnover. And, well, the middle part actually drop down. They are the HR costs, because we are doing a much better job when it comes to management of schedules in the stores. But you can unfortunately see how we've been influenced by the ban on sales on Sundays in Poland. Also other costs, so energy, external services, amortization, well, they are more or less the same, or maybe dropped year on year. So that also includes some external services, so unloading, cleaning the stores, and so on. We want our sellers to focus on their job. And on the right, you can see the growth. So SG&A cost per square meter, and the growth is 9% year on year. Why? I believe that we've come to a very important moment for the company economics, because before we've been operating our regular stores per regular model, but now we've joined the e-commerce online sales. That comes with changing costs, so changeable costs, so marketing cost connected with supporting our customers. So from the stable model of costs, we are reaching the mixed model. So more and more costs will come from e-commerce and will be changing. So we've summarized the cost. Now it's the time for the earnings. So the growth of sales over 20%. We have a better gross profit margin. Therefore, our leverage, operational leverage, and the operational profits over 300 million zloty and net profit over 200 million in the second quarter. So, well, that's really good. And for the first 6 months, well, the cost is growing slower than the sales. Well, the revenues are fine, gross profit margin is good, leverage is working, and net profit is 101 million zloty. This is a great growth year on year. So traditionally, I will also mention the most important elements of our balance sheet, starting with the inventories. Please note that our inventories have been nominally remaining on the same level for the past 3 quarters, but when we count them per square meter, they are between 14 and 1,500 zloty. And now checking that year on year, it's 1,458 zloty this year. That's 10% less than last year. But more and more inventories are sold online. So despite the fact that our e-commerce has no square meters floor space, well, this indicator is dropping year on year. So that means that we manage our inventories better and better. And now the working capital. So we keep on saying that we need to balance the inventories and the capitals. And you can see we are doing quite well, and we are still lacking 80 million zloty in order to actually equalize our liabilities and inventories. And we hope that during the second half of the year, we'll be able to reach that, manage them. So we have quite a lot of cash from the working capital, and that's what's happening really, because from the net debt in the previous years, we moved on to net cash. As you can see here, we have quite a significant amount of money. And if we add 190 million that we have located in the funds, financial funds, it would be over 500 million zloty. But we can't really include that in our cash result. So we show it with this exclusion. Why do we need the cash? Because we need to invest and develop our company. And you can see that here on this table showing you the capex and before most of our investment, the green part of those columns well dedicated to the development of our stores, and the gray part was dedicated to some online investments. And now it has changed because more is spent in this gray part, and this is what will be continued throughout the coming 3 years, because a lot of our investment will be dedicated to not just the stores, physical stores, but also other stuff such as the e-commerce. So now summarizing the whole 6 months. So we've got great collections followed by good LFLs and dynamic online sales. So margins were better year on year. The costs of stores are under control. So we are very happy about the good, sound financial results. We are managing our capital better. We generate cash. So that's really great. But now, what was LPP doing in the second quarter? Well, we've accelerated in Sinsay. So we invest in new technologies. We bought land for the new logistical center. And as announced before, LPP becomes a family company. So let's start with Sinsay. This is our youngest brand that was launched in 2013, but the target segment, or let me put it this way, so the clothes that we offer there, very fashionable but low cost, mean that we can actually saturate the market with our stores, especially in the south of Poland. Retail parks, the so-called retail parks, are popular, and this is where Sinsay is doing really great. And we want to saturate the market, continue saturating the market with Sinsay. And sales per square meter is the highest in Sinsay out of all our brands. And I believe that you must have heard something about the fact that Primark wants to enter Poland, and our answer to that would be the accelerated growth of Sinsay, because this brand falls into similar price segments. And if we are able to achieve our goals for 2019, so Sinsay should be the second biggest brand in terms of floor space. So this is how we want to accelerate its growth. So it's bigger than crop. New technologies. At the moment, 70 different projects have been started in LPP, projects that will increase the efficiency of the stores and e-commerce as well. For instance, Store Vision application. This is our own original application that was developed by our IT specialists for smartphones, smartphones that are used in our stores to better service our customers. With the help of this app, well, the seller comes to a close commodity, scans it and checks whatever else is there in the store still, how many pieces are there. So if, for instance, we have a customer who comes over and asks about a specific T-shirt, then the seller will know if it is there in the store or if it is in other store that is quite close in the neighborhood. And if the customer says that, well, I'm not interested in going to any other store, well, our seller can order this T-shirt, the specific size of T-shirt, delivered to the store or to the customer's house using our online stores. Well, another thing is big data. Well, it's very popular right now. We use it to actually analyze the trends, historic sales in our regular stores, physical stores, and in order to deliver better commodities. So if we, for instance, know that a specific store sells really little number of L sizes, then we send more S sizes there or M sizes because we know that they sell more M sizes. So we approach every store individually, and RFID, so the electronic tag. So I was thinking how to tell you about that. So I asked my colleague from the management board, the colleague that is responsible for that, and he actually told me, well, say with the help of RFID, we will seal the gap between online channel and the physical stores, because in the online channel, we know who is the customer. We know the gender, the address, who they are, what the customer is interested in, what is put into the basket, what is taken away, and what is purchased at the end. But with the help of RFID, we will be able to know more about our customers. We will know what kind of clothes are taken by the customer to be tried out, and then for some reason is not buying them, because we will receive an instant feedback about models that are not selling well. We will know more about the accessibility of given models, so we will have screens in our tryout rooms, so that the customers know that there are other sizes, for instance, or the system will be able to tell the customer what else can be actually paired with this specific commodity. So it will be helpful for the customer, but we will also be able to tell where the commodity is located. We will be able to actually go and find it quicker, and we will know the path from the logistical center to the store, because every commodity comes with a tag. And we've said it before about the cost. It will be about 60 million zloty for all our brands per year. So you may ask me, so how that benefits our company? Because we have cost. Are there any benefits? Yes, there are really powerful benefits, because we know that with the help of this technology, we will be able to increase our sales by 3%. So in our scale, let's say we sell 8 billion zloty worth commodities. Let's take the simplest margin, 50%. This is over 120 million zloty additional margin that will more than cover the cost of this new system. And now moving on to e-commerce. It's not really only e-commerce, it's more m-commerce, because a lot of that is actually being over 40% of online sales takes place via smartphones. Well, as we read the statistics, well, this is just a global statistics. This is what is happening around the world right now. M-commerce is more and more popular, and we know that our online users are not really patient. Once they buy it, they just want to have it the next day. So we are working on that. Last year, we opened a huge warehouse for e-commerce, warehouse for storage for e-commerce, to do e-commerce quicker. But we are also selling outside of Poland. So we are thinking about opening in Romania a logistical hub that will cover the south of Europe for our online users in the south of Europe. And yet another element, well, this is the link between the physical stores and online stores. So we can purchase something in the store and get it delivered home, and we're also working on solutions that the customers will be able to book some clothes. They come to the store, try it, and buy it or not. But for that, we also need logistics, and we invest in logistics. So recently, during the second quarter, we finalized purchase of 36 hectares of land in Brześć Kujawski. This is 15 kilometers from Włocławek and only 5 kilometers from A1 motorway. So it's a great place, and we will construct a new warehouse. The cost will be 400 million, and well, it is planned that we will have 2,000 employees. It will supposed to start 2021, 2022. So LPP is changing right now, becoming a family company. We've been announcing that before, but that transaction has been finalized. So the actually, the shares that were owned by Marek Piechocki, the CEO, and the chairman of the supervisory board, Jerzy Lubieniec, they transferred the shares to the foundations. So the first one, Marek Piechocki, transferred it to the Semper Simul, and Jerzy Lubieniec to the Sky Foundation. So what does that mean to LPP employees? Well, that means that the company will still be a family-owned company, a Polish company, and it's been secured against any sort of measures, overtaking. And so the supervision, owner's supervision, has been also secured for many, many years to come. So we have two biggest shareholders right now, but the most important thing is that the company's strategy will not change. We will still focus on the growth, development, expansion, and so on. And there will be no changes in the company in terms of the structure. So Marek Piechocki will remain the CEO, and Jerzy Lubieniec will remain the chairman of the supervisory board. And this is last-minute message. Well, we just opened the 21st market for Reserved in Israel, in Tel Aviv. It's quite small because it's only 730 square meters, selling only female collection. But, well, the preliminary sales results are very good. We are very happy about that. So we are still working with our franchise partner in Israel in order to open new locations there. And now a couple of words about our plans for the months to come. So we still sustain our plan to develop our floor space by 10%. The biggest growth will be in Sinsay and Reserved. So this will be the second half of the year. So Poland is not really growing that much, 3% recently, but we will be working on that. But the whole growth will come from outside of the EU. And from the EU and outside of EU. So we are opening new stores. In October, we'll be opening Kazakhstan stores. Yearly guidance is 590 million zloty. Well, it's higher than it was supposed to be initially in terms of capex, but we wanted to invest more in the office space this year. So we are talking about the expansion abroad, and our goal is to add at least one new country per year. This year we have 3 countries that I've mentioned, and next year we want to open 2 new ones. March, Bosnia and Herzegovina, and Finland in October in Helsinki, in the city center. So this will be 2019. And now let's check the map. The green color shows you the countries where our stores are there. The Slovenia, Kazakhstan, and Israel are gray, the countries that are added this year, and the blue ones, well, are the 2019 countries. What are the plans for our e-commerce? Well, this year, e-commerce would make up for 9% of the total sale, and our plan is to actually increase it up to 20% within the coming 3 years. How do we want to do that? We want to develop our stores abroad, online stores abroad. This year we'll open online store in Ukraine, and next year we are planning to open a pan-European store, this online store that will support all European countries. You can see that in blue here, and it is to be opened during the first 6 months of 2019. So we want to expand the coverage of our online sales. And we also still want to develop organically. But there is one exclusion asked by our franchise partner from the Middle East. We've joined the Namshi platform, or our franchise partner actually put the clothes, our commodities there. So we are there in the Middle East. So now, recapping our outlook. Well, we continue with our wishes to continue the trends, dynamic sales in terms of LFLs, dynamic sales growth in e-commerce sales, and well, we stick by our goal about the margin, gross profit margin, and we believe that better management of the working capital will result in further cash generation that will be spent on significant investments in the future. And before we move to the Q&A session, I'd like to tell you that today we are starting with a new advertising campaign of Reserved Autumn Winter, and we will have Joanna Kulik participating in that, a very famous Polish actress. So today the commercials are starting for autumn-winter collection of Reserved. So, ladies and gentlemen, thank you so much for being patient and for listening. And I'd like to now start our Q&A session. Please speak to the microphone because we are broadcasting online. So I can't believe that there are no questions. We just need the first person to ask the first question. Well, it has never happened before. We always have questions, and yes, there it is. There is the first question. Hello, I have the question. So how MSSF 16 will impact your presentation of the net debt and net cash, how that will influence you? Well, it will be a significant impact because our capital will be higher by 3 billion zloty and our debt will be higher significantly. I don't have an exact number, but the change will be a colossal one. Will that influence our negotiations and contracts with the banks? I don't really think so because our debt is really low, so I don't see any problems there. Hello. I'd like to ask about Mojito floor space in Europe. I saw that there was some decrease shown in the presentation. Was that an error? I don't remember that it significantly dropped. Well, maybe we've been closing down some stores because that always happens. But this is a great brand. Well, the 2 past years were really great, so we believe in it. So we are not changing anything in terms of Mojito brand. And one more question, the third question. Michał Kuzinski, JP Morgan. I have this question concerning the article that has been published by Sunday Telegraph. And the CEO said that he's planning a dynamic development in the UK. So can you tell us, can you share any details with us? What's the growth there? what's the development there? Well, we have one store opened in the UK, so we are now observing this market a little bit. We want our brand to be, we want to have more awareness about our brand. Well, we don't really have any immediate plans to open any store in the nearest future, but we are observing the situation. But what we can see right now, the sales of the Reserved brand is doing really well in London, so but we don't have any details. And how about LFLs in German stores? Well, they were positive in Germany, one-digit growth, but positive. Well, across the whole Europe, the LFLs were positive. And now about the tax rate, the high tax rate. Why is that so? Well, we had some new reserves for the tax risk connected with the verification, tax verification or control. So what is the possible argument with the tax office? Well, maybe it's not an argument. This is just a discussion that's concerning CIT and our brand for 2012. And now about the future. What is the actually effective tax rate that we can expect? Well, we are still talking about this 19-20%. Well, this reserve was just one-off event. We have one more question, and there will be another question from our online users. I have one question about slide number 30. So we have 35 countries in 2019. So how that will work logistically in terms of investment in distribution? Will you be sending the commodities from Poland, or will you be opening local centers in Spain or France, and how that would work in terms of CapEx? At first, we want to start with our logistical center in Poland. Once we open this logistical distribution center in Romania for the Southern Europe, well, part of Europe will be supported by Romania. But right now, we are not planning to open any distribution centers immediately. We just want to observe the situation. We want to see where the demand for our products is the highest. And based on that, we will be taking decisions concerning the future and the hubs, distribution hubs. We are at the moment not really planning any further development of the distribution. And now about the investment in Romania as compared to the distribution center in Poland. What about the CapEx? We are not investing in foreign distribution centers abroad. So we hire it. We hire the distribution center and the operator. So we don't really know much about foreign investment. Investment-wise, we don't really know much about those markets land-wise. So now about the dynamic growths in the future, are you planning to add additional brand in addition to Sinsay, like low-cost segment? Or maybe Sinsay is just enough? No, will not be creating any new brands. Well, those that we have in our portfolio are more than enough to cover the market. We may be developing Sinsay, maybe more stores, maybe more commodities, but this will not be a new brand. Do we have any questions from our online users? Let's see that. Can you tell us whether the stores outside of the cost outside of stores, mainly connected with e-commerce, will be as quick, as fast as the last year? Well, it seems that the dynamics will not be as high, but the growing e-commerce shows us that it will be around 6-8% on per total cost per square meter. So there will be stable, permanent cost from the physical stores and the changed costs coming from the e-commerce. But I don't believe that the dynamics of the growth of the cost will not be as high. We have one more question. Are you planning to increase the sizes in house crop brands? Yeah, sure. Why not? It's true that when analyzing the data, sales data, so the big data mentioned today, we can see how much knowledge we can get from that, but you need to analyze it properly. We can see right now that we lack those very big and very small sizes, like XS size is selling really well. So we will be investing in that. We will be developing that. So we can see that because our customers need that. And so the big data serves the customers, as it turns out. One more question from me, because it was very surprising when you compared Sinsay business model with Primark business model. So can you tell us were you comparing that? Maybe that was the average sales per square meters on prices of your commodities. No, we don't have information about sales per square meter in Primark. Well, we've been just generally checking that. We know that Primark is operating at low prices, and well, Sinsay does that too. Like, we sell great collections at low price, so we want to further develop that. So you want to invest in small, low prices. Well, the first prices, the initial prices are low. They are so attractive, as attractive as in no other brand of ours. So Sinsay is offering good fashion at low cost. So the lower prices are doing miracles. So the clothes are selling really well, and we want to invest in that. And the fact that Primark wants to actually enter Polish market, well, that encourages us to further and quicker development in that. So thank you so much. Ladies and gentlemen, it seems there are no other questions. Thank you so much. Thank you for your attention. And, well, let's see each other in 3 months.